We've seen oil prices retreat for a second week at this point. Interesting, right?
Yeah, and no surprise that the two leaders of the OPEC Plus group would extend their voluntary supply cuts, because the whole point of this is to defend oil price. So if you drop into the Bloomberg, you'll note not only oil but other commodities have pulled back for a second straight week, and this has a lot to do with an easing of the war premium over the weekend. The leader of the, I should say as of last Friday, the leader of the Iran-backed Hezbollah group said it didn't know about the October 7th attack. So this is just one of several factors that are adding into a growing view that this war in the Mideast unlikely to spread, and it is the possible contagion to other regions that would really be a huge risk for oil. Let's take a look at how oil prices have moved. And what you see on Friday is a complete pullback in a big way in both NYMEX and Brent crude. What's interesting is that West Texas Intermediate was down almost 6% for the week. And so the leaders of the OPEC coalition announcing in separate official statements on Sunday that they are extending their supply cuts in the situation with Saudi Arabia. They're slashing daily crude production by about 1 million barrels. Moscow curbing exports by 300,000 barrels, and that's on top of earlier cuts made with the fellow OPEC Plus nations. So again, not really a surprise here, and it's interesting to note that as the war premium has faded, and so you're seeing less of a jump in the price of oil and in fact more of a retreat, what is now rising to the forefront in concern of traders and investors is the demand-supply situation. The huge user of oil, of course, China. Economic data has continued to show weakness coming out of China at a time when we're seeing inventories here in the U.S. continue to climb. And so that change in the supply dynamic bearish at the current moment for oil.
Meanwhile, Sue, there's been a big surge in options, and that indicates that producers might be hedging.
Yeah, this was the big talk late last week. Who was behind this surge? The open interest had tripled in the past week on these very niche Brent calls. Well, actually, there were a combination of very bullish calls with bearish puts, and a lot of the speculation is that this could be a large unnamed producer trying to lock in price, and that shows the volatility in the oil market continues even as we're seeing oil prices pull back. The fact that there could be a disruption, we haven't seen one yet, is what a lot of oil users and oil producers are concerned about. Meanwhile, it's not just Brent crude and West Texas Intermediate that's been pulling back. Again, we saw gold and silver surge some 10% during the October month, those weeks when it wasn't clear what was going on with the war situation, and they continue to be volatile as well. Gold had hit 2,000 just the past week, pulled back a bit, and now we can see there's a bid. So very volatile market. Traders continue to be on edge and looking to the latest news to come out of either OPEC Plus or the war situation, and very focused on what the supply-demand equation is.